Welcome back, and joining us to put the day's markets action into perspective is Graeme Franck from PSG Wealth Sandton Grayston. Thank you so much for your time, Graeme. It's quite interesting to see the market moves today after the Fed meeting yesterday, of course, leaving interest rates unchanged as expected, but seeming to be hawkish in terms of the rate cuts now, with an indication of one rate cut this year. We did see the US markets skyrocketing yesterday, reaching new highs, but today seeming to be pulling back, except for the Nasdaq. What's your take on what the Fed said there, but also the market reaction that we have seen since then?
Yeah, I mean, that's been the driving force in markets for the better part of this year, in fact, for the better part of 12 months. Going into the start of this year, the market was discounting 6 lots of 25 basis point cuts. So 1.5 full percent in cuts. And as you said in your introduction, that's now down to 1. Last time I was on your show just a month ago, the market was still discounting 2. So we've kind of moved from 6 to 2 to now 1.
Wow.
And yeah, the market is gyrating quite a lot at the moment regarding interest rates. And South Africa, I don't think will do anything until the Fed acts. So we also are a little bit beholden by what the Fed's going to do.
Well, I mean, quite interesting, because we have actually seen the rand holding up quite a lot, still below 18 rand 50 against the US dollar. Is that just maybe calm on, markets expecting that this government of national unity could actually be a good thing at this point?
Yeah, I mean, obviously tomorrow we've got the big announcement in terms of who's going to be probably the president, the deputy president, the speaker of the House. So quite a few big announcements potentially tomorrow. But I was looking earlier, again, exactly 30 days ago, the rand was at 18.40. That's exactly where it is today. And despite that, it went above 19 just around the times of the elections. And, the MK party's surge in popularity, the rand blew out, and now it's come slowly back to. So it's really been a sort of 30 days of two halves, very weakness and uncertainty leading up to the end of May. And as you say, the rand has strengthened quite dramatically in the last, call it 2 weeks.
Fascinating. 30 days of two halves, really just signaling the volatility that really resides in the local currency. Graeme, let's go on to the company news that came out of the JSE today. Mr. Price releasing its annual results. They're posting a revenue growth of over 15%, reaching a record operating profit. But I don't know, it's not a big increase on the bottom line, 6.7% increase in headline earnings per share. What was quite interesting for me is that I saw all the retailers were up except for Mr. Price. Just talk to me about how markets digested these numbers, because it doesn't seem too great.
Yeah, so I think the market ran ahead of the results. So Mr. Price has actually done quite nicely. It's up 10-odd%, even again just since the election. So yeah. I think the market was sort of starting to gently, and not just Mr. Price, by the way, all SA Inc. shares, the banks, the retailers have done quite well. Mr. Price came out recently and said they're not going to be as badly affected by load shedding, not as many days lost, not as much cost inherent in the system. So we still like it. We still think it's a really great retailer, especially when one considers that a number of the other retailers, especially the food retailers, have had some big problems over the last 12 months. So Mr. Price, at least, from a quality perspective, has kept its powder dry.
All right. Well, let's take a look at Goldfields, because that share price is under pressure again. The last time I checked, it was down by more than 11%. Of course, it released an update and a production guidance, some weather challenges in Salares Norte, saying that they are revising down production guidance there as they are in a kind of ramp-up phase. But also now that's led to them revising down the guidance, production guidance for the whole group. Terrible news all around there.
Yeah, all coming out of Chile. So again, Goldfields is, they've from South Deep problems to Chile problems, they seem to lurch. They're the one gold mining company that doesn't, I don't know, they just never really, so it's hard to put a handle on it, whereas Anglo Gold are more steady Eddie, and Harmony are also very well managed and much more volatile to a gold price, if that's what you're looking for. And Goldfield sort of sits a little bit in the middle. So yeah, it's just another disappointment. I think the shares were down 8 or 9% when I last looked.
Yeah,
we don't have a lot of gold in the portfolios just generally, by the way, because it's more a fiat currency and it's more a hedge. So we steer clear from gold just generally, but within the sector, Gold Fields is not looking great.
Yeah, and we also know how investors get jittery about all-in sustaining costs. They're also going up because they have also revised those up as well. Graeme, I don't know if there was any significant news that came out, because I saw that Telkom's stock was actually down pretty significantly today by about 6%, and I saw that MTN was also trading about 4% lower. And it's quite interesting because Telkom was up yesterday after they released their trading statement saying that their bottom line is expected to be up more than 200%. Is there anything that markets are trading off of here?
Yeah, as we mentioned very briefly earlier, I didn't see anything on the telcos today.
Yeah.
But again, there's been some wild moves just generally. The retailer SPAR was up 8 or 9%.
Yes.
The other day, Pick n Pay was up and then down with its restructuring. So yeah, and even just the theme of today, resources are down and SA Inc. shares just generally are a little bit stronger.
Yeah, very, very interesting moves that we are seeing there. Graeme, let's get to your stock pick for today. What will it be?
So I'm going to go fairly boring on the banks and go for FirstRand. Again, last time I was on the show, it was Mr. Price, and I'm just really trying to pick some decent quality SA Inc. shares that should potentially do well if we get a half decent government of national or coalition government. They're trading on a PE of 10 times, FirstRand dividend yield 6%. So a lot of bad news priced in, despite the fact that it's had a bit of a rally over the last 2 weeks.
All right. Well, thank you so much for your time and giving us insights on what has been moving our money today, Graeme. That was Graeme Franck from PSG Wealth Sandton Grayston.